Well, it's a good afternoon from myself, Nastasia Arendse, live from the JSE. Lots to talk about, including the news out of ABSA. We did hear speculation last night that its current CEO, David Mnele, might be stepping down. And as it came out about an hour or so ago, the SENS statement from ABSA Group, and it reads that it has become clear to the parties that there is non-alignment on matters of strategy and culture transformation, and that they've appointed Jason Quinn, who is going to be the interim group chief executive with immediate effect. And of course, he was the CFO, so they will be announcing the CFO name probably later this week. The share price was down 4.4% earlier on. And we'll have a conversation with Chantal Marks from FNB Wealth and Investment in terms of how that share price has reacted with results to the news. Lots of that to talk about, but we'll also have a look at what's going on in terms of the market, JSE, current market activity. Before we get to that, let's have a look at what was going on the Asian side. Those stocks on that Pacific front of things were a bit mixed, with the stocks in Japan leading the losses when it comes to that particular region. The Nikkei down 1.9%. Mainland Chinese stocks also closed a little bit lower, with the Shanghai Composite down 0.1%. Its Shenzhen Composite also down 0.1%, and the Hang Seng was flat. Looking at what happened in Europe, of course, those slid into negative territory, and it all relates to the lackluster sentiment that is surrounding global markets. Looking at those specific numbers, the French CAC down 0.7%, German DAX down 1.3%, and the FTSE down about 0.9%, almost 1%. But when you look at the U.S. futures picture, that pointing to another second day of losses. And this is quite interesting because over the past couple of days, past couple of trading sessions, that particular market was reaching record high after record high. So it's going to be very interesting as to how that market activity plays out for the rest of the day. In fact, even for the rest of the week, as we do have U.S. earnings season that continues to roll out in full stream. We've got numbers coming out of Netflix, so Chantal and I will discuss that as well. And with that said, let's welcome our market analyst, Chantal Marks, who is the head of investment research at FNB Wealth and Investment. Chantal, thank you so much for your time this afternoon.
Thanks. It's so good being here.
So let's talk about, what you... No, do continue.
So I think the start of the week has been quite soft, as you mentioned. I mean, today is no different to yesterday. The local stock market coming under a little bit of pressure. Today, though, all major sectors trading in the red. It seems as if financials are hardest hit, and among the financials, it's definitely ABSA. But elsewhere, British American Tobacco, which has quite a large weighting on the local exchange, also coming under pressure after US regulators indicated that they'll be coming down hard on menthol and nicotine content of cigarettes in the US.
Let's talk about the ABSA story. I mean, I'm curious from your perspective, what have you noticed in terms of the share price performance from the time Maria Ramos had just stepped down to right about now when Daniel Mnele had just been CEO?
So it's quite difficult to really say, because you do have that big sell-off in the middle of that period through the market, the general market sell-off that dominated March last year. But generally, I mean, if I look at the performance of the banks over the last year, you do have ABSA having delivered a total return of 47%. Of course, this does include the rebound after the COVID-19 sell-off. But that's kind of in line with, I guess, FirstRand, better performing than Standard Bank, slightly underperforming Nedbank and Capitec. So it's kind of in the middle of the bunch, I'd say. But it has staged a pretty solid rebound after that initial COVID-19 sell-off.
Right. Let's look at U.S. earnings season. I mean, are there particular companies that you look out for? I know, the guys at Vestec always look out for J.P. Morgan, and that's because they hold J.P. Morgan. For you, are there any particular companies?
Yeah, I mean, we generally like looking at the earnings season from across the board and on an aggregate basis as well. So we get a good idea in terms of the health of that market and how the equity market generally performed from an earnings perspective relative to expectations. We usually start off by looking closely at the banks. So that was our focus last week. And the banks did not disappoint. Most of them released revenue and earnings numbers that exceeded analyst estimates, with very bearish provisions raised now becoming or now being able to be released, really supporting earnings growth there. This week, though, it's going to be all about the tech space. And I mean, today in particular, we've got Netflix releasing results, which would be the first of the broader FANG kind of grouping of technology stocks. And we also have ABSA out with, not ABSA, sorry, Apple out with some new product launches. I would hope ABSA was not going to come out with new product launches today. But yeah, for now, I think the focus will be on tech.
Right. So, I mean, just to touch on the banks, my question, in particular, the U.S. banks, that is it the more consumer-focused banks or the capital-intensive banks like your J.P. Morgan, Goldman Sachs that will probably, lead the charge by the end of the year? Which do you think it could be?
Oh, that is very difficult to say, but I think that the guys that have more diversified revenue and earning streams will probably continue to do slightly better, just because they aren't exposed to one specific area of the market. What we have seen over the last, let's say, 6 to 9 months is that the banks with large asset management and investment banking exposure, specifically in trading in equities and bonds, did slightly better than the retail banks. But it all depends on the health of the US consumer. If you do get transaction activity rebounding quite strongly, there's no reason why those banks can't do well as well.
We were talking about Netflix. I mean, there's so many options out there. There's Hulu, there's Disney Plus. You almost it's kind of daunting to decide which streaming platform you want to go for. But let's look back at 2020 when we were in the middle of a lockdown. Did you find that the streaming wars were intensified in that particular period?
Yeah, I'm not actually convinced that there is a streaming war, because it is so difficult to decide between these streaming services. I mean, I myself have 4 different streaming services in my home, and I would be quite upset if Hulu comes along as well, because I'll probably have to subscribe to that also. And that's what seems to be happening mostly or across the world, really, is people are looking for quality original content. And as long as streaming providers are able to put that out, they will reward you by having more than one subscription. And that's I think why I'm not too worried about Netflix's market share at the moment. I'd watch more closely what their churn looks like and whether or not they are managing to keep subscribers as opposed to losing them to other streaming platforms.
Are there particular themes that you think will dominate, market sentiment, considering that in the background, we're still worried about COVID cases that continue to rise in various parts of the world?
Yeah, I think that there are a lot of things that investors are concerned about, including the continued rise of COVID cases. There are some geopolitical tensions between the US and Russia that's also worrying markets a little bit. Nuclear talks with Iran, and I think that another tail risk, of course, is inflation, which is something that we haven't spoken about in the last 3 weeks, but that market participants were freaking out about a few weeks ago. On the plus side, though, I think that the vaccine rollout will continue to gain traction. It's been very slow in South Africa, but it's picked up pace quite substantially in areas of Europe, in the US, and across the Middle East and Asia. So that reopening trade still very much on. I think it might be a function of what is in the price at the moment, but certainly that will be supportive, along with sustained lower interest rates, easy monetary conditions, fiscal support to the economy, and generally what looks like improving economic data.
Well, Chantal, let's leave it there. Thank you so much for your time. That is Chantal Marks from FNB Wealth and Investment. That's it from me here at the JSE. Let's go to an ad break and we'll have more news after that.